Good morning, good morning. How you guys doing? Welcome, Monday morning, March 11th, 2024. Hope you guys had a good weekend. Hope you didn't relax too much. Hope you got some work done. I know I was busy all weekend, working on the report, the latest Rouge report for members. And I also managed to get a YouTube video done of the analysis of the CFTC data, the latest set of CFTC data that came out March 5th. So I hope you get a chance to view that video. It's up on YouTube. I put it up yesterday. You can get a chance to watch that this morning. So today, I wanted to briefly take a look at the CFTC data for the markets, the S&P and Nasdaq, because those are a couple of markets that I didn't cover in the video that I posted yesterday. So I thought it would be interesting to take a look at the charts, the supply and demand dynamics taking place on the S&P, Nasdaq, and we'll also take a look at the CFTC data and see what it's telling us. Because if you remember, there's something that has been taking place with the S&P 500 that has been most unusual, right? And if I bring up the data here, you'll see it right away. The S&P 500 has been going up, and there it is. S&P 500 has been going up and up and up and up. Meanwhile, when you look at the data, what do you see? Okay, this is non-commercial. These are the guys betting on the direction of price. And what you can see is that the short column has been red. Okay, that means their positions have been aggressive. They've been aggressive with their positions. So they're getting aggressive with their shorts, and they have been for some time. Okay, aggressive with shorts as price has been rallying up. Now, I've shared some articles with you guys with respect to how some of the big CEOs, insiders, are selling their shares in their companies at these highs. And take a look at the long column. You see, the reason why the coloration of these cells are blue is because it's to tell me that based on historical data, their positions are very cooled off right now. Okay? Which means they're not really focused on long positions. But if you look at short positions, you can see they're aggressive, they're red, all right? And one of the columns that I have here that really sticks out to me is this one here. 13-period average. Now, a lot of people ask me, why do you have a 13-period average? Well, I'll tell you why. It works like a moving average. I like to see positions that exist today in comparison to what they used to be. Now, I can do that by scanning through the data and going back to previous dates and seeing what the data was and comparing it. Or I can use a 13-period average. And I chose a 13-period average because I tested tons of different numbers, 10, 12, 20, 5, and the 13 just seems to have been that magic number, lucky number 13. So when I look at the 13-period average, what do I see? The first thing I see, for instance, is in longs. 272,000 is the average over the last 13 periods. But right now we're at 285, so we're slightly above average, and that kind of makes sense since price has been making all-time highs. Look at shorts. Average is 461,000. We are at 489,000. Previous to that, we were at 522,000. So we've seen a slight decline in short positions, excuse me. We've seen a slight decline in short positions over the last week, but still the number is well above the 13-period average, meaning that right now the short positions that they're holding are above their 13-period average of positions. Okay? So they're focusing on shorts as price has been rallying up. So now let's go over to the S&P. Here's what we got. The other day I showed you a map of the biases, and I'm going to do that again just to give you an indication of what we're dealing with here. Now, when it comes to the monthly chart, we definitely have a bullish bias. Okay, price is rallying to the upside, all-time highs, nice trend line to the upside. Everything is looking pretty good here. The proportions of price is good. Okay, what does that mean? Some of you are asking, what does he mean by proportions? Well, I'm talking about the distance between the trend line and the highs of price and where we are currently at. All right, which tells me that price could definitely go a little bit higher, and I'd like to see that price go a little bit higher before retracing back down. But so far, this is telling me, since the monthly chart represents a long-term view, this is telling me that long-term bias is bullish. Okay? Period. Now, let's go over to the weekly chart. And it's just like, when you approach an intersection, okay? First you have green light, and then you have the yellow light. Yellow light is the caution light. It's like, take your foot off the gas and just beware, right? There's a transition potentially happening here. Okay, for me, this is caution. Caution. So why caution? Well, I'll tell you. If you take a look at this structure all throughout here, all we have is one straight line to the upside. Okay, you see that? One straight line to the upside. There's no structure like on the monthly chart. Okay, there's no structure like on the monthly chart, and one straight line to the upside. Yes, we have a point here where a trend line was connected, and here where a trend line was connected. But let me show you something very interesting. Look at the distance between the trend line here and the top of price, and the trend line here and where price is now. You see the difference? Okay. You see the difference in the size of that? I'm going to use some red circles to point out. See the size of that? See the size of that? Now look at this. And look at this. Okay? You see the difference? That there's a big difference there, and that's giving us information. That's telling us that this is not proportionate. It's telling us that this structure here being built on the weekly chart is not reliable. Okay? So any type of pressure to the downside here, let me get my pen. Any type of pressure to the downside here, if it's not supported by the monthly chart, is doomed to fail. Okay? Now the monthly chart's got a great structure. It's got everything in place for a long-term move to the upside. But if this was not in place, long-term move to the upside, you could not count on the weekly chart to provide that long-term move to the upside. Okay? In terms of the daily chart is also looking very bullish. Okay? This one's very bullish. Why is it bullish? Well, you have a nice uptrend. See the trend line? Beautiful. Nice uptrend. Not only that, but the banks came in and they were buying right here. And so you see what happened with price. Price came, dropped down into demand, shot up, and that's where we're at right now. So an uptrend has been created on the daily chart, and it has been engaged. Okay, so short-term bias is bullish. Okay, and that is why we got the bullish pressure to the upside. Now, since this has already been engaged and it's already played out, what's required is for new demand to come into this market. So we need new buying to come into this market. So how are we going to know if new buying comes into the market? Well, we'll look at the charts and we'll look for the signs of institutional buying coming in. But here is the snapshot of what's taking place. Long-term bullish bias, medium-term bias, we're on standby because there hasn't been any structures built. Okay. Short-term bias is to the upside. But one last thing I will mention about this. If this structure that's being built right here on the monthly chart gets broken through, price can drop very aggressively. Okay, very aggressively. So all eyes should be on the monthly chart and whether or not this structure to the upside holds. Okay. And since we've got CFTC data that suggests there's an incredible amount of shorts being put on the S&P, I would be focused on that monthly chart to see how well that structure holds. All right. Now let's switch over to the Nasdaq. Nasdaq has been a little bit different with respect to their positions. We can see long positions have been somewhat aggressive. Over the last several weeks, they've been reducing their positions, their longs, 97 down to 82. Look at the 13-period average. You see how the 13-period average is 85 and we're at 82? What does that tell us? That tells us that the momentum of buying is slowing down. All right? The momentum of buying is slowing down. Look at short positions over the last few weeks. 65,000 to 81,000. That's quite aggressive. What's the 13-period average? 58,000. What does that tell me? That the progression, the momentum of shorts being built have been increasing dramatically. Their 13-period average of short positions is 58,000 and they're 81,000 right now. That's very dramatic. All right, so we look at the Nasdaq, and what do we see? We see a similar situation to what we have going on with the S&P. Uptrend on the daily chart. Demand was created and engaged. But look at what we just got last week. We have institutional demand breaking, which is leaving room for a drop in price. And if price was to drop, which looks like it's likely going to do that, if price was to drop and come down to this area of demand, this area of demand has already been used to facilitate the short-term momentum to the upside. So if it decides not to use this anymore, this area can break and then we can see a drop in price. Now, is it possible? Yeah, it certainly is possible. Because again, when we look at the CFTC data, what are we seeing? Momentum on longs is declining, while momentum on shorts is increasing. It's one of the valuable things about having that 13-period average. It can give you that type of information. All right. So that's what I'm seeing with respect to those two markets. I want to switch really quickly to FNMA. I used to trade this stock a long time ago, and was just going back and looking at it, and I'm seeing a lot of momentum kicking in here. This is something that might be of interest to some of you who trade volatile stocks like this. One of the things I want to point out is the supply and demand. To show you how powerful supply and demand is. You know, we have this area down here. I guess it depends on how you draw it, but This area of demand down here, price came down, was 39 cents. And within a year or two, we've gone up to $1.46. It's quite amazing how price reacts to the supply and demand on the charts. Just absolutely incredible. This one's just running. And I don't see, how this can stop until about at least $2. Looks very clear from what I'm seeing. Okay. Wanted to quickly look at Apple, because a lot of news on Apple. Why isn't it performing as well as it should? Well, we were looking at the weekly chart, and we had noticed that there was a very important zone up here, and we were watching for it to be removed. And one of the key things that we also wanted to see was a close above it. And when that failed to take place, we knew that there was weakness on this chart. And so since then, we've been seeing nothing but demand areas being removed, which means weakness to the downside. The last area where the institutions were buying up this stock was this area here. Okay. And as you can see, when price was here last, they used it to facilitate this move up that was not able to close above the previous highs. Now we're back down here again. So they're either going to continue buying from here and drive price back up, okay, or they're going to remove this area. And if that's the case, then we're going to see a push down much lower. But I am not interested in buying Apple. I was at one point. We had our eyes on this one. But when we saw this failed move to the upside, we quickly took this one off our watch list. Okay? So another thing I'll point out, when you first initially look at this chart, it is bullish. There's a bullish bias on it, okay? And the reason being, again, is because if you look at the structure, we have an ascending trend line. We had institutional buying coming in, and price started to make its move from it, okay? Right here. But when price is not able to close past the previous highs, that means the uptrend is there. They did create the demand, but now interest in continuing to buy is starting to wane. Now that demand zone there that was created to help facilitate a move higher is still holding. And as long as it holds, we should remain bullish, optimistically bullish, okay? It's not that I want to enter into a position, but I would be looking for signs of the momentum shifting back to the upside. And what would that look like? Signs that momentum is shifting back up to the upside? It's when we start getting supply zones on the charts removed. Okay? As long as supply zones are being created and holding, momentum is not shifting. Once supply zones are being created, removed, and it allows for price to move to the upside, then that means momentum is shifting. So if I see momentum shifting from this specific area, then potentially I will open up a position long. Okay? That's how it works. Okay, folks? So let me go over Bitcoin really quickly. Have you seen Bitcoin? Pretty incredible. Remember I told you because of the GBTC chart, this was likely going to be removed and price was going to go higher? Well, that's exactly what took place. Okay? Exactly what took place. Going back to GBTC, we had that. I guess I could open it and show it to you here so you can see. We had this area being removed. Remember that? We were talking about it last week. Okay? So this foreshadowed what was going to take place with Bitcoin. And now we see the big move to the upside. So new demand is being created. I would wait for price to retrace to those areas of demand and then I'd be interested in buying. NatGas, I have this on my personal watch list. I'm watching for a move to the upside. Currently, we have a bearish bias on this one. So you don't want to be buying when there's a bearish bias, okay? This is medium-term bearish bias, all right? So just remember that. Medium-term bias equals bearish, okay? Medium-term bias is bearish right now because we have contacted an institutional area of supply that I located right here. And so you see they push to the downside right now, okay? So what I'm going to be watching for is I'm going to be watching the lower time frame charts, and I'm going to be looking for bullish momentum to kick in. So I'll be paying attention to the daily chart, and I'll be paying attention to the 4-hour chart. And I'm going to be watching for bullish momentum to kick in. And once bullish momentum starts to kick in, I'm going to be opening up a long trade on NatGas. Okay? So I just wanted to point that out to you guys. Just give you a little heads up of what I'm watching. And I think with that said, that's pretty much it for today. 20 minutes, 8:22. We've gone about a couple minutes over. But I hope that was helpful for you, to give you a brief insight of what we're looking at and what's taking place in the markets. So I hope you enjoyed it. And that's it. If you want more information about what it is that we do, you can always visit us at whiteoakfx.com. Would love to have you as a student or just a basic member. And yeah, that's it. Enjoy yourself, and we will see you tomorrow morning. Thanks, guys. Take care.